Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Thursday, February 14th. Another slow day yesterday. Some of the indexes managed to grind up, eke out some small gains. NASDAQ up 9, S&P up 90 cents, and the Dow was down 37. Very, very quiet. We keep continually getting this consolidation, a push up, consolidation, a push up. No volatility. Volatility is uneventful, and that's what we need really to start trading actively in the market. So the markets are telling us, now take a step back. Let's trade the best setups and wait for volatility to really kick in. And markets will not grind, cannot grind higher every single day. Now we've had a slow grind higher since January 2nd. And, of course, off of the November lows after the election, we did have a little bit of volatility, but, again, making higher highs and higher lows. And then that jump up in January just fueled a little bit of move higher. It's just really been the most boring market I've ever seen in my career doing this. But, nonetheless, pick our spots, be selective, reduce your share size. So you want to take minimal risk until this market can realign itself. Now, the index itself, nothing really has changed. I got a few emails that I get every day, and some of the emails were, let's short the S&P now, and although you could have shorted the S&P early on, it's really not. It really wasn't wise, and the reason why is because we had the Russell up above main pivot of the day. We had the transportation sector up above main pivot of the day, did not break it, and we also had copper holding up well. So all three sectors, main sectors and indices, were bid up, and the S&P basically hit the main pivot and then bounced. So you would have gotten stopped out of the trade. So you really need to see intraday what you're looking at. And see what the other sectors are doing. Say, hey, do we have market divergence? If one sector is falling down and selling off, and the other three main sectors are hanging in there, more than likely that S&P is not going to follow too much lower. So really need to keep an eye on that, okay? I want to run into the indicators. Not much here, but I do want to show you a couple of things. NYMO, again, look what's happening here. We're just chopping around from negative 20 to plus 20 here this whole month of February. So what we're just saying, again, it's telling us that we can move higher and we can move lower. So we got plenty of room on both sides here, guys. And if we're at the other pivotal point of the 1525 in the S&P, we consolidate. A break above that would probably send us to the 1550, which would be second minor pivot. And then, of course, the old-time pivot, main pivot high, would be the 1575, okay? So just keep an eye on that, but we'll go into the index in a minute. All right, so then let's take a look at our NASI. Now, this is a weekly chart, right? But I'd like to just show you, we have not gone on a sell signal yet, but any down day between today and tomorrow would get this on a sell signal. Here's the NASI. Now, if you look at the New York Stock Exchange Summation Index, and let me just open that up for you, you see we are already on a sell signal for the last 3 weeks. Now, this could chop around and give it one of these and then back up again one more time. But this is something to take note of, that the weekly New York Stock Exchange Summation Index is on a sell signal. And it really catches good bottoms and tops here. Not that we're looking to pick a bottom or top, but this is definitely a warning sign. Again, it's only Thursday. We can actually rally hard here Thursday, Friday, for whatever reason, and this would actually go back on the buy side. But just something to show you what we're looking at. Okay, so now let's take a look at sentiment here. Again, sentiment at all-time lows, 12, 13, chopping around between the middle of January and February here. So really not much to talk about. Really, really quiet. And as you can see, the CBOE, we were up above 1, and all of a sudden we broke back down again. So what this tells us here is that the market participants, the masses, are very confident that this market is going to continue to go up. Now, that could be a good thing or a bad thing, but more important, if you're a contrarian, that's a really a big sell signal to me anyway. At one point, now again, we're not looking to pick bottoms and tops, and we don't know when this is going to sell off. And the best thing to do is trade the trend, and that's what I'm doing. So that is that we have bravery basically in the markets, that the market participants get a little blip up and then we come right back down again, like happened here, right back down again. So this is something that we really need to keep an eye on, because we start taking out above 120, the people that are starting to get brave are now starting to get a little worried, and that's something that you need to watch, because when the herd starts going to the door, you only have one exit. And like I said, when the market does correct, and if it does correct violently, you could wipe out 2 months of gains in 4 or 5 days. Now, let me show you the New York Stock Exchange new lows. I showed you the New York Stock Exchange new high, new low yesterday. Now, let me just show you this. When the markets are right relatively between 10 and 40, 10 and 50 even, you see that really there's no panic, right? Everything is fine. But when you see we have these big spike in new lows, right? That's when you get some sort of a bottom. But when the markets are here, look what happens. The market starts to sell off here. And then again here you have the big spike, and then that actually marked the bottom. And then here when you have this little bit of a spike, but you see where we are right now? The markets, we have a long way to go before we start hitting new lows. So when you see this index starting to creep up, and you start seeing making higher highs and higher lows, this is pretty good saying that there's fear back into the markets, and markets are starting to sell off, and people are starting to cash out of their stock portfolio. So watch this index. This is going to be something that's real interesting to see, along with the new highs and new lows. So briefly, let's just look at the dollar. Really, dollar hasn't been doing much of anything, but again, it's in this sort of, we have this head and shoulders pattern here. We do have this descending trend line, 2 bearish patterns, but again, it could break up to the upside, guys, so we really don't know yet. We'll really see what happens in the next coming days, a few days. Now, I want to show you China. I haven't mentioned China in a long time. We covered China when we were breaking down. Now, we had a big recovery. China is a big manipulator with their economic data, so you really have to kind of digest what really China does. But if the markets are up and China recovered like it did, this is a very good sign for the markets, because China is a big, as you know, producer a buyer of goods, and this is something that's really interesting. If China continues to run higher, the long-term outlook of the economy is actually looking quite well. However, this is kind of extended, as you can see here. So we're looking, if China starts to sell off, or they get some negative data start coming out, I would see this Shanghai index start to roll over. Now let's take a look at the FXE, which is the China 25 fund. This has already rolled over. So this is what I wanted to show you. Okay, we had a big recovery off of November. China, we had the ETF start to run up exactly as the S&P, but the S&P is now at its highs, right? China, the FXI fund now is in a bear flag pattern, broke down already below the 50, below the 20, and now sitting on looking obviously above the 200. But this is in a bear flag pattern here. So if this starts to break lower, that's going to be another warning sign for equities. Okay. Now let's go into. I want to show you one more thing, and what this is here is this is a Max Pain chart, right? So the theory here behind it is that the market itself conspires to cause the most pain during options expiration. And where the most pain is, where most of the herd of traders lose most of the amounts of their money. All right, so what does it do? The market wants to cause, how is the market going to cause most pain? So for those of you who really don't know much of options, you don't even really need to know. But if you look at this, these are open interest calls and puts, and what this does is these are the amount of call and put open interest, meaning that the amount of traders, investors are holding put options and call options. So we have an overlay. We look for overlays, right? So now we have the puts outnumber calls by 2 to 1. To 2 to 1, about the same as last month, right? So now we have call open interest the highest at 145, and then between 150 and 154. The put interest is highest at 125, okay, and then you have 135, and then between 139 and 150. So we have a big overlap in consistent range. So what we were looking for here is that a move lower, all right, a move lower or flat would still instill the most pains for the put buyers, okay, as you can see here. So bottom line is this: if the market stays flat or moves slightly lower, that's going to instill the max pain. And so what it's basically saying is that we're giving us basic market direction. Between today and tomorrow, if the market even closes lower, down 30, 40, 50 points, all of those put buyers are going to, those premiums are going to expire worthless. And what we generally have in options expiration is a relatively bullish to flat market, and that's what we've had this week. And I don't see any type of change between today and tomorrow. Okay, so I hate to say it, if you're trading the markets as a whole, I would expect some sort of a boring day today and tomorrow, and then usually starts to pick up again next week. Usually, all right, and that's really Max Payne, just something fun to take a look at. Now, again, guys, it's not that this is 100% tradable, but it's a good guide to get an idea of what kind of activity you might get. Now, obviously, if some kind of economic news comes out or a big announcement, could really shake the markets up. Okay, now let's just run real quickly to the index charts here. I'm not going to get involved too much. As you can see here, really nothing has changed. We're just literally just sitting, grinding higher. We had a larger channel, we broke out, and then we had a larger channel, and then we broke out again, and now we're just sitting here. Same thing with the spiders. As you can see, we did eke out a small little gain with the spiders. Not much really to talk about. We did put in a doji candle. Again, that is not a sell signal. It's an indecision candle. We want to take out yesterday's low to really start getting us enticing for looking for sells. But in order for us to do that, 150, 150 is going to be the main focus on the spiders, and then of course the 149.80 support will be the secondary support line. 150, 150, keep an eye on that number. That's going to be on a closing basis. That's going to start get us to look for shorts. Now, if you look at the momentum indicators, our MACDs are rolling over, our stochastics are rolling over, and of course our RSI are starting to roll over. So we do have some negative divergence as the market's starting to move higher here. So just keep an eye on it. It's a 60-minute chart, so divergence cannot play out. Actually, could start to move higher again. How many times have we had negative divergence and nothing really happened? S&P daily 1520 spike up again. Doji, we do have a doji. Our CCI starting to tick up a little bit, which is nice to see. I just think that we're so elevated here that a little bit of move lower would be welcome to, even for the longs actually. Okay, and this is the 60-minute chart. Big bearish rising wedge right up in here from 1228, as you can see. So something that I am using caution. There's a lot of red flags. Now again, nothing has triggered, right? Nothing has triggered. We need price to move lower and close below our main pivotal lows. But we do have warning signs. As you can see here, take a look at our momentum indicators starting to roll back down again as price is moving up. So we have market divergence again, at least in the S&P. Take a look at the 30-minute chart. Really not much to talk about. So this has really been a very boring market all of January and all of February as of right now. So as you can see here, we've been chopping around. We popped up 2 days. We popped up the third day. We tried to make a new high. We failed, and we went right back down to the low end of the range. So really nothing here if you're playing the markets. And that's why I like to look for a news-driven event, a catalyst for a reason to buy or sell the stock for that day. At least that'll give you that short-term window of a trend where you could possibly capitalize and make some money. All right, XLF, just want to show you, we haven't covered the banks in a little bit. Really overextended now. I think the banks are ready for a pullback, and it might just pull back into a bull flag and push one more time and get us into something somewhere around March. But keep an eye on the banks here. Banks is going to be key. Technology has been waning, as you know, and that's partly due to Apple. But it looks like that technology may be starting to pick up a little bit. Transportation sector holding in good. Our leader of our sectors here, and this is something that's holding in well. Really can't look short below this number. 102.50, I believe it is really the number that we're looking for before we really start to break. Now, you can obviously trade this if we break the last 2 days low and then stop above it for a quick fade. But again, these are risky trade setups, so you really need experience in order to do that. Okay, and diamonds here, nothing really to brag about. We were down, diamonds were down, and the Dow Jones was down, and the other sectors were up on the day. And IWMs here, as you can see here, rolling up, continuing to move higher. So this is something that is very bullish in the longer term picture. Short term here is still bullish, but we are extended here. So looking for a pullback any day. Here's Apple, and I meant to show you. I watched Apple. I said, guys, take this as a trading stock, and it's exactly what it is for now. We are holding on to this lower end of this horizontal trend line. A break below that, you would definitely see the lower trend line of this red red lower trend line here, and then if that breaks, and I'm looking for a flush before we start really getting long. Unless you're trading the stock, if you want to build a position, this is not the right spot for it. Okay, lastly, the Qs, as you can see, guys, really not much has changed here. We're just really chopping around here. But again, this is bullish here, just consolidating for the last 6 weeks. If we continue to consolidate and we can get a big gap up above this base, that'll be a breakaway gap, and then we can really start looking for some beaten down tech stocks to look for. So this is one sector I'm looking at. I'm also looking at coal sector. I'm looking at TAN, TAN ETF. It's solar. So some of these sectors are starting to set up stage 1 basis breakouts, so we're going to be looking for that. But we need a little bit of a pullback. If we can get a pullback, come back in, and then we can look to really snap up some real discounted stocks. All right, guys, have a great day today. We'll talk to you tomorrow. Take care.